This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our diamond and financial expert, Harold Siegel. We're taping today's show, January the 18th, 2018. Our time is 8:12 Mountain. Our podcast, you can connect with us via rarecoloreddiamonds.com. And if you would like to speak with Harold Siegel personally and privately about anything discussed on today's show, investing in hard assets, speak with him at 1-800-432-1022. You can get our free weekly newsletter from Harold, the companion to the podcast. As we tape today's program, US dollar at 90.54, a bit of a pullback. Canadian dollar 80.24, gold at 1329.40, silver 1706, gold silver ratio 78, platinum $1,000, so it's popped up. Palladium $1,098, WTI 63.78, Brent at 69.07, Nat gas 320, Bitcoin US dollar 11,826.89, Bitcoin Canadian 14,739.26. Bitcoin Wednesday was below 10,000 as governments are really starting to take a look at what is this Bitcoin and what does it mean for us. It's finally starting to happen, and you're seeing that there's a pullback in the Bitcoin market. And Harold, as well, something that you've touched on in the past, in the United States, they are trying to keep government open. Now, today, the House is on track to pass a one-month government spending bill later today, with the Speaker of the House, Paul Ryan, said to be close to gathering the votes needed. The bill would then pass to the Senate, where Democrats would be confronted with the conundrum of whether to block the measure in order to gain leverage on immigration. Now, the White House says Donald Trump supports the bill in its current form. Also, OPEC and its production cut allies meet this weekend to review their strategy to clear the global oil glut as they risk becoming victims of their own success. U.S. production is going to soar, and that could undo all of OPEC's hard work with output that could top 11 million barrels a day next year, surpassing both Saudi Arabia and Russia, according to government forecasts. And as we mentioned, WTI at 63.78, Brent 69.07, Nat gas 320. But the big story this week, Bitcoin plunging back from where it was around in December 20,000 to below 10,000. And here we are today at roughly close to rounding up 12,000. So it's pulled up a bit. But Harold, a wacky week when it comes to Bitcoin.
You better believe it, Randy. Again, as we've always said, it's not something that we recommend trading in unless you're a huge speculator. Now, I do know some people that have made money in short term with Bitcoin, people that bought when it was in the few $100 range. But the fact is there's so much more to a currency like that because it doesn't trade like a stock or a commodity. So in the sense that it's not really controlled and there's hidden fees. In actual fact, for example, we've seen Bitcoin go from, $20,000 that it was at last week to $11,000 that it's at this week. Now, there have been reports, for example, of people buying Bitcoin and just buying and holding and basically losing almost all their money, even though Bitcoin went to, close to 20,000. So you got to be very, very careful when you're trading in a cryptocurrency that has nothing to back it up whatsoever. So the fact is that if you let your Bitcoins just sit there, they can disappear. And the reason they can disappear is that there's hidden charges that people really don't know about that eats away at your Bitcoins. And next thing you know, even though the Bitcoins are going up substantially in price, the fact is that people are still losing almost all of their money with them. Also take into consideration that you can't use them for that many things. You can't buy things with them easily. Plus, it's always been looked at as a money laundering type of situation. So recommendation is to stay away from it unless you're a huge gambler and speculator. It's not a market that I would recommend in any way, shape, or form. It's a very, very dangerous market to be involved in. The other situation, Randy, is the fact that the U.S. government could actually shut down this on Friday. Now, the fact is that there has been times in the past that the U.S. government has actually shut down. The last one, I think, is recently as 2013. In actual fact, there has been many times that the U.S. government could not actually come up with that budget and did close down, and it's happened many, many times. Happened in 2013 under Obama. It's happened in 95 and 96 under Clinton. It's happened in 1990 under Bush, 87 under Ronald Reagan, 3 times with Ronald Reagan, 4 or 5 times with Ronald Reagan. So the fact is that it could happen. And if they don't come up with the funding, literally the government shuts down. Everybody in Washington goes home and is basically on vacation until they can work things out. Obviously, that's a very detrimental thing. And I think at this particular point, with certain positive things happening in the United States, like the stock market hitting record prices and breaking over 26,000, it would be a shame to see this happen. And basically, most of the blame would go towards the Democrats. So I don't think that it's going to shut down this weekend, but again, we've seen it happen many times before. And again, I don't see the reason why they would allow this to shut down, except just being difficult type of thing. So we'll see what happens Friday. The other thing that's very strange at this particular point, Randy, is the fact that the American stock market, the Dow, is over 26,000, was up over 300 points on Wednesday alone. So the fact is that the Dow is going up. They're raising interest rates in the United States to strengthen the dollar, supposedly, and to fight inflation, which there's very little, but the U.S. dollar is falling, which makes absolutely no sense. How in the world is the U.S. dollar falling when we're raising interest rates and the U.S. stock market is so strong? So I know Trump did make comments back several months ago that he didn't want a strong U.S. dollar. I just don't see how in the world that's happening at this particular point with the fact that interest rates have been rising and, again, the stock market is in such good shape at this particular point. So we'll have to see what happens on Friday going into next week. Right now, the only thing that seems to be important in the United States is the fact that the Dow is over 26,000, and that's where people are euphoric at this time. But just like Bitcoin at 20,000, the Dow at 26,000 is very, very expensive, and a lot of smaller investors cannot afford to invest in that. So in all reality, the Dow at 26,000 plus has priced itself too expensive for most investors at this point. So we'll have to see what happens there. A lot of analysts are predicting that the market has just been up way too much for too long a period of time and is looking for a major adjustment to the downside at this particular point, barring any type of geopolitical situation. I just don't see that in the cards at this particular point. I think that the Dow is heavily supported. Again, you've got big money coming in not only in the United States, but internationally, especially out of Europe, where their markets are not doing as well. And again, foreign money is coming heavily into the U.S. at this time. So we'll have to see what happens. But I don't see any major pullbacks coming at this particular point unless something happened with North Korea. And I just don't see that happening at this time either.
In our free weekly newsletter, we do have material on the stock market. Stock market optimism from pros reaches the highest level in 32 years. You heard right, 32 years, and now is at the highest levels before the crash of 87. Bullishness, or the belief that the market's heading higher, is now at 66.7%. And that is in the latest Investors Intelligence Survey, a widely followed gauge of sentiment among investment newsletter authors. That's the highest level since April 1986, a potential warning sign that the rush into equities is getting overdone. After all, A year after the bulls had reached this level came the infamous Black Monday crash that sent the Dow Jones Industrial Average down 22% in a single day. Another story we have, stocks are now in complete Bitcoin territory, according to an asset manager. Fragile markets are on the edge of chaos, which has compared what it deems an overvalued stock market to cryptocurrency bubbles. Stocks are in complete Bitcoin territory, according to Francisco Fila, the CEO at asset manager firm Fanacera Capital. He told CNBC, valuations on stocks sometimes feel like Bitcoin because, in a way, it's totally disconnected from fundamentals. It's purely based on sentiment and flows from central banks and the private passive investment market. Bitcoin is obviously a cryptocurrency, meaning that unlike fiat currency such as the dollar, it's not backed by any central authority. Critics have said that this gives it no inherent value. Now, the other final story we have, and this is a pretty big one because it involves an economic advisor from the Reagan and Bush years. Reagan and Bush economic advisor says stocks are due to fall. Martin Feldstein, one of the most influential Republican economists in the last 40 years, is warning that the stock market is poised to plunge. That could drag down the U.S. economy, he wrote in an article in the Wall Street Journal. And we have an article in our free weekly newsletter, Harold, and I encourage people to get it from you because it really goes through the pullbacks after long runs in the market. Jeff Clark has put together an article that says, here's what historically happens to stocks when bull markets end. You undoubtedly know that 2017 was a record-setting year for the broad stock markets, and while gold was up last year despite numerous headwinds, most mainstream investors aren't paying much attention to gold since they keep putting so much money into their stock portfolios. But in this article, they list all the bull markets and all the pullbacks, and some of the pullbacks are just massive after you have a huge run-up the way we have in the stock market. And Harold, this is a major, major concern when you have sentiment at the highest it's ever been, and you have valuations that are totally disconnected from fundamentals. At some point, logic dictates something's going to happen. This really reminds me of around the year 2000. I remember talking at that time about the NASDAQ. We knew the NASDAQ was an accident waiting to happen, Harold. We knew that. It was just a matter of the timing of when the hell it happens. Well, finally, I think we're at that point with the markets. Now, could they run for the rest of the year? Possibly, because of the new tax treatment that they have in the United States. But we're sitting back and we're just waiting to see what happens with this train and when it runs off the track, because sooner or later it has to happen. It's just common sense. Things don't just go on forever and ever up all day, every day, and never have a pullback, as is the case with the stock market. It really reminds me of the NASDAQ in 2000, an accident waiting to happen. What will be the accident? We do not know, Harold, but we'll look back and be able to pinpoint it at some point in time.
Very true. But again, at this particular point, there is absolutely no signs. Now, everybody tries to make a name for themselves. As an analyst, the only way you're going to make a name for yourself is if you make a prediction and that prediction actually does come true. It doesn't come true that often. And at this particular point, the reason that I don't believe that the Dow is ready to fall at this time is that there's very few investments out there that are lucrative. I mean, with interest rates down at basically 1% or 2%, nobody can make money leaving your money in the bank. So what that basically leaves people to do, especially people looking to retire, is to go into a market like the Dow, even though it's risky. Most people that trade stocks lose their money because they're picking individual stocks possibly as opposed, to the whole market type of thing. A lot of different ways to invest. But when you're looking at markets right now, even looking at gold and silver, they've been trading in a range now for 4 or 5 years, since 2011, actually, when this market hit 1920 and fell after that. This market is basically traded in a range. Very few commodities have broken out. The bond market is dead. So there's not a lot of investments. Even something as speculative as Bitcoin did catch people's attentions, mostly speculators, because it was a get-rich-quick situation that people felt that they could possibly, get involved and make an awful lot of money. Well, at $100 or $200, you could make a ton of money. But now that the market is so volatile and dropping as it is from 20,000 down to 10,000 in just a couple of days, again, it's just not a suitable investment for most people. In fact, there's a lot of investments out there that are not suitable anymore for most investors, either because it's too highly priced or because it's just too volatile and risky. So at this particular point, it appears that the best game in town is the Dow, and there's not a lot of markets out there for people to invest in, which leads them to invest in riskier markets, which they're not necessarily suitable to take advantage of. So again, at this point, Randy, I just don't see anything aside from a major geopolitical situation. And we've seen in the past that we have seen these type of situations, and the market still doesn't react to it on the negative side. Sure, in 2008, the situation with the mortgage crisis was so gigantic that it had a massive effect on all the financial markets. If you remember, the Dow dropped from 14,000 to 6,500. Since that time, the Dow has gone from 6,500 all the way up to 26,500. This market has made the largest move ever in history and has not pulled back at all, really, during that period of time. So again, at this time, I'm not a buyer of the Dow. It's way too expensive. Most people cannot invest in it because they can't afford it. But there's not a lot of investments out there for people to invest in, which is another reason why the Dow has moved to the level that it has.
That's why we believe in hard assets, things that are alternative to paper. Invest in things that governments cannot print. We're talking about hard assets like diamonds, gold, silver. Get our free weekly newsletter, the companion to the podcast. Speak with Harold. His website is rarecoloreddiamonds.com. He has the world's finest investment diamonds online, like a museum that you can see, and they're in the vaults of rarecoloreddiamonds.com for you to make that investment in. Maybe you'd like to start your own diamond investment portfolio or add to it. Go to rarecoloreddiamonds.com and take a look around. Speak with Harold about investing in hard assets. Any questions you have about the financial markets, your personal financial situation, Harold is more than happy to speak with you personally and privately. 1-800-432-1022. The website is rarecoloreddiamonds.com. The Bank of Canada raised rates, but caution, it's going to be cautioning stimulus still needed. The Bank of Canada pushed forward with another quarter-point interest rate increase and said more hikes are likely coming, even as it cautioned it isn't in any rush to return rates to more normal levels. Policymakers, led by the Governor, Stephen Poloz, increased the benchmark overnight rate to 1.25%. Would be nice if the banks here in Canada passed that along to savers. The highest since the global recession and their third hike since July. The move is a nod to what they believe is a red-hot economy running up against capacity with the jobless rate at the lowest in more than 4 decades. At the same time, central bank officials repeated their dovish language about moving ahead cautiously and warned they expect the economy will require continued stimulus to remain at capacity. But Harold, here in Canada, they did raise rates and we're up to 1.25%. It seems that the Bank of Canada does not want to get far behind the United States when it comes to interest rates. I'm a little surprised that they're pushing ahead in the fashion that they are. As you've mentioned before, inflation is not a concern, and you don't want to go into deflation or stagflation. So that is the surprise in this scenario, but they seem to be a little bit behind the United States, but in lockstep as they raise interest rates.
Well, again, my feeling on that, it doesn't make an awful lot of sense to raise interest rates in a country that the people are having financial trouble. And we know that through different reports that we've read and spoken about on the show that the debt level in Canada is the highest that it's ever been. So if more people are borrowing money on their credit cards or from the bank or credit unions or wherever they're borrowing from, and interest rates are going up, it means that those loans cost more. So, the fact is that why raise interest rates when there's very little inflation in Canada and the real estate market is very volatile? Again, it shouldn't be as volatile as it is because most people own their homes. They're not investments. They're where they live. So basically, when all of a sudden a home is a commodity that is trading in a very volatile manner, that is not a good situation for most people. There are speculators out there that try to take advantage of situations in real estate, but real estate is a very difficult market to trade because it's not a short-term thing. You could get into a run in real estate, but then it takes a while to close the deal and to sell it. With interest rates going higher, I think that that's going to thwart the upward movement of real estate in Canada and definitely hurt the Canadian citizens because their loans, which again are the highest that they've ever had, are costing them more money. So I just don't see the point. There's no inflation. We haven't talked about inflation for several years now, and that's why none of the inflationary markets are moving. So why raise interest rates and hurt the citizens of Canada when it's really not accomplishing that much?
One of the stories that caught our attention this week is with the pullback in cryptocurrencies like Bitcoin and Ripple and others, you saw people running into gold, Harold. Now, amid the wild Bitcoin ride that has wiped more than roughly 50% off the cryptocurrency's price in a month, a pattern may be emerging. Sellers are switching out of digital gold and into the real thing. Bullion dealer Sharps Pixley, a subsidiary of Europe's largest precious metals coin and bar outlet, regularly sees trades north of £1 million, while sales of gold coins at Frankfurt-based Coin Invest jumped fivefold as the largest digital asset collapsed after surging 1,400% last year. That's according to their director, Daniel Marburger. He said, yesterday was a hell of a crazy day. He said from Frankfurt, emails and phones did not stand still with customers asking how could they turn their crypto into gold. The current price swings across seemingly every cryptocurrency is bringing to the fore a question that has loomed over the industry since its inception. To what extent can virtual assets be a store of value? By swapping out digital gold and into the real thing, some investors may be providing an answer. Now, Ross Norman, a gold dealer, he started the exchange for Bitcoin via an intermediary 3 months ago. He describes his customers as almost embarrassed by their newfound fortunes via Bitcoin and other cryptocurrencies. They often store it in a safe deposit box in his underground vault, following extensive due diligence to prevent money laundering. We're seeing trades north of £1 million every couple of weeks, said Norman from his shop at St. James Street. It's been a welcoming addition to our business in a period when physical demand from more traditional sources has been subdued. And customers as young as 25, and that seems to be the wheelhouse for a lot of Bitcoin, is 25, 35, come in carrying laptops holding Bitcoin they accumulated when they traded at when it traded at $1 or below. One, Norman said, had 1,000 Bitcoins he intends to turn into physical metal. So, Harold, this is a story that came up this week, and it really grabbed my attention. It is in our free weekly newsletter. You can read the entire story and get our free weekly newsletter from Harold, 1-800-432-1022. We'll be happy to send it out to you free of charge every week. But this is something that we're starting to see. I personally don't believe Bitcoin is gold. Gold is gold, silver is silver, diamonds are diamonds, and there's something that you can hold in your hand. We know from some of the heists that have taken place here recently when it comes to cyber currencies being stolen, that's something in my mind that cryptocurrencies are not gold, and people are starting to realize it and get out of it as they have those massive profits they would like to log into.
We're talking about Bitcoin because it's in the news every day and it's exciting and it's volatile and people are interested in it. But don't misunderstand me in any way, shape, or form. Don't invest in it unless you are willing and capable of losing all the money that you invest, because it's a currency, a cryptocurrency that nobody understands, or very, very few people understand. And a lot of it is owned primarily by just a few people. So when they sell out, the prices can absolutely go ballistic. So the fact is, and then, as I mentioned before, there these other hidden charges in there that if you're not aggressively using them, these Bitcoins, you're going to find that in all reality, they're going to dwindle down to almost nothing. So bottom line, we are not recommending in any way, shape, or form that people invest in Bitcoins. I think it would be a foolish thing to do, especially if you have no knowledge of how they trade. So as far as I'm concerned, it's not something that I am recommending in any way, shape, or form. I would not like to see the listeners of this show investing in Bitcoin. But again, it's certainly in the news, and we do bring you information on various markets for your own edification. But again, it's not something that I personally invest in, and it's not something that I would recommend to my listeners to invest in. Chances are is that most people that own them are going to lose all their money.
It is interesting that people are moving to gold, though, Harold, and that, I think, maybe is the point of the story, is that people are getting out of the cryptocurrency into gold. And I think that is a huge positive for the gold market going forward.
Yeah, so do I. I truly do. I mean, gold is sitting right now at $1,330. It's been spending a lot of the time basically trading in the $1,100 to $1,300 range. It has to go to $1,380 and close twice above that level in order for, in our opinion, a breakout to happen. Will we ever retest the highs of the 1900 level that we saw back in 2011? We should, because it never should have dropped the way that it did from 1900 down to 1100. So the fact is that gold is a great asset to own as a hedge against bad things happening that are either geopolitical or financial. It's totally separate from the stock market. We own gold primarily because it's a hedge against, again, major bad things happening in the market. And we've seen those happen. In fact, we were involved in the largest bull market in gold in history. It was our radio show back in 2000 that recommended gold substantially. I remember the show saying sell out of your stocks and buy physical gold at the $250 level. People thought we were crazy at that point because we were looking for gold to really take off because primarily of the relationship between the U.S. dollar and gold. The U.S. dollar was coming off its highest level. Gold was at its lowest level. 9/11 was happening. We felt that there was going to be a major change in the currency markets, and when we started recommending gold at 250, it went all the way to 1900. It was an 11-year bull market that many of our listeners made absolute fortunes from. And if you did make fortunes in gold at that point, again, that was an opportunity lost because it was only us and John Embry at that particular point that was calling for this massive move in gold. When I say that analysts can really make a name for themselves if they are able to ever call a market, we're talking about that it was our company, our recommendations that pointed to the listeners, mostly in Canada, that took our advice and bought physical gold at $250 and wrote it up to $1,900. Other people leveraged that. Leverage is not something that we recommend. Leverage is you could still catch a huge market and leverage it and still end up losing your money. You could see Bitcoin go from 100 to 20,000 and evidently still lose your money because of hidden fees and things like that. So as far as I'm concerned, gold is a phenomenal asset to own. I still own a lot of it myself, and I do believe that gold will be viable again. But as a hedge against geopolitical situations, currency devaluations, things like that, gold is paramount to own at this particular time.
Harold's website is rarecoloreddiamonds.com. It's like going to an online museum with the world's best investment diamonds. And if you've never taken a look at some of the rarest green and blue and pink, yellow diamonds, They are there on Harold's website, rarecoloreddiamonds.com. They're there for you to invest in. You can speak with Harold about hard assets, diamonds, gold, and silver, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. This week in the news, one of the biggest diamonds in history has just been dug up, and it is a big one, discovered in the mountainous kingdom of Lesotho in southern Africa. Gem Diamonds is found a 910-carat stone, about the size of 2 golf balls. It's Letsing, a mine in the country. It's a D-color type 2A diamond, which means it has very few or no nitrogen atoms and is one of the most expensive stones. The diamond is the 5th biggest ever found. The Letsing mine is famous for the size and quality of diamonds it produces and has the highest average selling price in the world. Gem sold a 357-carat stone for $19.3 million in 2015, and in 2006, found a 603-carat Lesotho Promise. This exceptional top-quality diamond is the largest to be mined to date and highlights the unsurpassed quality of the Letsing mine, according to the CEO of Gem Diamonds, Clifford Elphick. Now, the reason I bring this story up, Harold, there was a lot about big white diamonds. And it's interesting to note, there was a story, and there was a big white diamond found by a Canadian company, and eventually it was sold, I believe, to Graf. And the interesting part about these big diamonds being found is, with the equipment they're using today, those stones are not being pulverized. It used to be in the past, with the equipment that they had, these big diamonds would go through their processing and more than likely would be crushed. Now, the way they have things set up, it's changed. They're starting to find, obviously this mine is special from the standpoint of finding big whites, but there are other diamonds being found around the world, and a lot of it has to do with the mechanisms they're using to sort. And instead of these big diamonds being crushed and no one really knowing about it or shedding a tear, they're being found because of technology, and it's sort of changing the market in a sense. But as we touched on the last show, Harold, these big diamonds, they're the rarest of the rare when it comes to white diamonds, but it provides one hell of a challenge when it comes to how do you cut the damn thing, and how long do you take, and mark it out, and how many years will it take, and also how many diamonds do you cut? Do you just do one? It's not an easy process.
No, it isn't. It's actually fascinating the way they do it. But the larger the diamond, the more difficult it is to cut, and there's stress lines and that. So in many cases, it has to be X-rayed. So you really have to sit down and plot out how you would cut a diamond of that size. And again, the concerns you brought up are true. Are you going to cut it into multiple diamonds? Well, in many cases, you can't. The fact is that it's going to tell you when you look at the interior of the diamond and that type of thing, it's going to tell you what shape you're going to cut it in and how much you're going to lose. We've had diamonds that we have cut that, let's say, were 20 carats, that cut down to half of that size. Because a lot of times, when you're looking at a diamond, if you keep the diamond as a larger diamond, the color is going to change. So, for example, let's say, you had a 20-carat pink diamond, rough diamond. But if you cut it down, for example, to around a 15 or a 16 carat, it may go from a fancy pink to a fancy intense pink. But if you were to cut it further, it may turn out to be a deep or a vivid, which could be worth way more. So again, it's up to the cutter to determine how to cut that diamond. It's a true art that's handed down from generation to generation. Most of the top cutters in the world are the Hasidic Jews that have been in the business from generation to generation. And where it is changing, where everything used to be done by hand and now can be done by lasers or that type of thing, again, the major principles for looking at the diamond are the same. So it's a fascinating situation. And we've actually had seminars where we have shown diamonds on the wheel being cut. And as most people know, that diamonds are the hardest product known to man, substance known to man, and it takes another diamond to cut another diamond. So it's a fascinating process.
Do you still have that video up on your website, rarecoloreddiamonds.com? I think it was there at one point.
Yes, we do in our private seminars. And anybody out there that would like a private online seminar to learn how to invest in diamonds, that's something that we can easily do for you. It's free of charge if you're, serious about investing in the rare diamond market, and you should be, because the fact is that rare color diamonds, investment quality, never ever decline in value. Only one diamond out of every 100,000 is colored, and just because a diamond has color to it does not mean that it's an investment quality diamond. For example, the best investment quality diamonds, dollar per dollar at this point, are Argyle pink diamonds, because 95% of the pink diamonds come from the Argyle mine in Western Australia, and that mine is going to close within 2 years, meaning that there won't be any more pink diamonds on the market, a few years down the road, and we believe that the price of Argyle pinks will increase substantially.
Speak with Harold about the diamond market. He's one of the world leaders. He really brought, and we have proof of this via our radio shows that we did in the past, that he was the one who brought the idea forward of investing in diamonds. And that was back in 2005. He started rarecoloreddiamonds.com. And from there, people who have invested with Harold and in the different diamonds he's offered, they have done very, very well. Connect with Harold at 1-800-432-1022, the website rarecoloreddiamonds.com. As we finish out today's program, two things of note. T. Boone Pickens, the iconic oil and natural gas investor, is getting out of the business. He helped shape since the 50s. T. Boone is 89. Announced in a letter he's shutting down the commodity and energy stock hedge funds he runs. He cited poor health and advanced age as the reason. It's no secret the past year has not been good to me from a health perspective or financial one. He wrote in a letter posted on LinkedIn, health-wise, I'm still recovering from a series of strokes I suffered late last year, and a major fall over the summer. If you're lucky enough to make it to 89 years of age, like I have, those things tend to put life in perspective. It's time to start making new plans and setting new priorities. But we tip our hat to T. Boone Pickens, a man who really is one of the all-time great oil and gas investors. And finally, yes, I have to admit, this is something that I took sort of a pleasure in. The people in the United States, obviously very frustrated, some of them anyway, with their president, Donald Trump. And the media just can't stand him. And when it came out that he was in what the doctor stated, and remember, this doctor, Ronnie Jackson, has been the doctor of President Obama and George Bush. So he's been the doctor for 3 presidents. President Donald Trump, yes, he is fit for duty and should remain so throughout his presidency, according to the presidential physician Rear Admiral Ronnie Jackson, who examined the president late last week amid criticism. The 71-year-old commander-in-chief may be unfit for office. I know a lot of people were throwing around, he has dementia, he has Alzheimer's. Not so. Jackson said in a screening of Trump's cognitive function to look for signs of dementia or Alzheimer's disease was normal. Jackson said he didn't think such an exam was necessary, but conducted it at Trump's request. I absolutely had no concerns about his cognitive ability and neurological function, he told reporters at the White House. Supposedly Trump, who is 6'3", is about 239 pounds. I find that a little hard to believe. But Harold, for those that were hoping to get rid of Donald Trump via some sort of mental capacity issue, it's not happening, folks.
No, but I certainly understand it. Boy, there's a lot of people out there that's all they talk about is Trump at this particular point. Again, you've got a successful businessman running the country, which I think is a very good idea. Always felt that that we'd be much better off with a guy like Romney or somebody that is very successful in business, because a country is a business. It's got to be run like a business. You got money going in, you got money coming out, and you have to close deals. And we thought that Trump would do a great job at that. But so far, he's been an embarrassment. He's taking credit for the Dow breaking 26,500, when in all reality, he's had nothing to do with it. The one thing he has had to do with is the dollar dropping as much as it has. So, again, not a big fan at this particular point. I have to admit that I did vote for him, but very disappointed in the direction he's taking the country at this time and the embarrassment that seems to happen on a weekly basis with him.
One thing you do hear from people that surround him is that he has incredible energy. And I would give that to him. He's 71 years old. He just works his ass off. And whether you agree with him or not, he works very hard, I believe, for the people of the United States. Now, I think he really outworked Hillary, too, and that was one of the reasons why he won the election, because he was just flying here, there, and everywhere. She didn't go to Wisconsin once. He was there multiple times. So whether you agree with him or not, that's fair. But one thing for sure, he is a very unique individual when it comes to energy. He just seems to go, go, go. And for his age, that is pretty astounding. Thank you, Harold, for your knowledge and another outstanding podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Harold's website, rarecoloreddiamonds.com. Take a look at the world's finest investment diamonds from the vaults of Rare Colored Diamonds. And get our free weekly newsletter, the companion to the podcast. We'll be happy to send that out to you as well. That's it, another edition of the World Financial Report podcast. Good luck to Harold's New England Patriots on Sunday. We will talk to you next week.